From the studios of Farm Journal Broadcast, this is AgDay.
Growing your operation while protecting your bottom line.
I'm Michelle Rook here in Iowa, where farmer feeders are expanding for the future.
We continue our look at the fall drive as tariff talk heats up again on the campaign trail.
Critics say your tariffs will end up being like a national sales tax.
Nope. Now, talk of trade might have factored into a big flash sale of U.S. ag.
Seeing a little demand kick in, I think that's a great sign.
We'll see how much could soon be moving across the border right now on AgDay.
AgDay is brought to you by Pioneer.
Ben's bins, please hold.
Yeah, Ben's has been busy all day.
Seems like no one can keep up with this new Z series. What did you all put in these seeds?
Science.
Good morning, I'm Clinton Griffiths. The top destination for U.S. ag exports just made a big buy of corn. On Wednesday, USDA announced a flash corn sale to Mexico. It came out to 1.6 million metric tons, or almost 64 million bushels. Of the total, more than 41 million bushels is for the 24-25 crop, and 22.8 million bushels is for the 25-26 crop. There was also another flash sale of 13.4 million bushels of corn to unknown destinations and more than 6 million bushels of soybeans, also for delivery to unknown destinations. Now, the big corn buy from Mexico comes at a time when its farmers are facing drought conditions along with increasing consumption. Meanwhile, as we told you yesterday, Mexico's new president, Claudia Sheinbaum, is reaffirming her country's ban on the planting and consumption of GMO white corn.
Seeing a little demand kick in, I think that's a great sign. A little boost for the market. Seeing some big sales of corn this morning, that's going to help us out. I just think that we have a product that's, we know the crop size is big, but we're at a price where we're going to start to find some of that end user buying. We're seeing that.
Something else that could also be sparking ag buys, former President Trump saying he wants to renegotiate the U.S.-Mexico-Canadian trade deal he put in place if he becomes president again. Now, the president also discussing tariffs at the Economic Club of Chicago, getting into an exchange with Bloomberg's editor-in-chief. The former president arguing American consumers would be the biggest beneficiary of increased tariffs.
You have America at the moment has $3 trillion worth of imports. You're going to add tariffs to every single one of them. That is going to push up the cost for all those people who want to buy foreign goods.
Now, what's going to happen?
That is just simple mathematics, President Trump.
It's not. Yeah, it is, but not the way you figure it. I was always very good at mathematics. Yes. Let me tell you, you're saying $3 trillion. Those companies,
$3 trillion worth of
and they don't have to pay. And if, by the higher the tariff, the more likely it is to have them come into the country.
The higher the tariff, the more you're going to put on the value of that piece, those goods, the higher people are going to pay in shops.
Ready? The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay the tariff.
Democratic challenger Vice President Kamala Harris has called Mr. Trump's tariff proposal, quote, a sales tax on the American people, end quote. It's worth noting that the Biden-Harris administration has continued to back certain tariffs on imports put in place during the Trump administration. Meanwhile, a new study is highlighting the potential impacts of a renewed U.S.-China trade war on American farmers. The study was commissioned by the American Soybean Association and the National Corn Growers Association. That study says there would be an immediate and substantial drop in corn and soybean exports to China if a new trade war were to happen. Specifically, it says soybean exports to China could fall by 14 to 16 million metric tons annually. That would represent a more than 51% average decline from baseline levels. Corn exports to China could decrease by about 2.2 million metric tons annually, or a more than 84% drop. Now, it predicts Brazil and Argentina would likely claim those lost market shares. Researchers say the potential trade war would lead to a steep drop in soy and corn prices here at home, causing a ripple effect across rural economies. John Deere's decision to lay off more than 1,800 workers has been a big topic on the campaign trail. And this week, Deere announcing additional layoffs. Iowa warned, showing 80 workers at Deere's Davenport Works facility will lose their jobs. And a Deere spokesperson has told news agencies in the Quad Cities area 200 workers will be laid off at its Harvester Works in East Moline, Illinois. along with 7 employees from its seeding and cylinder operations, also in Moline. The company saying the layoffs are due to reduced demand for products produced at those facilities and are not related to production moves. While cooler conditions persist in the Midwest, there are signs that some much-needed moisture is on the way to the west. Meteorologist Jack Van Meter has an update.
Taking a look at our high temperatures across the nation today, we actually see pretty big cool down, especially for the eastern part of the states. We can see that we have a huge divide from the plain states and actually moving into the Midwest and the Great Lakes states, moving all the way out east as well. But take a look at this plume of warm air. It's almost foreshadowing to see what will be coming down the pipeline later on in the week. Here's our low temperature map, though. This is the big important map because a lot of people in the country will be seeing some of their first cooler temperatures and actually some of their first 30s of the year, especially up in the northwest. As we can see Billings at that 35-degree mark, though. Warming up again a little bit where we saw those warmer temperatures in the Central Plains and then cooling off once again as we moved towards the East Coast. Something, of course, to obviously keep in mind with that trend moving throughout the day. And a bit of frost on the corn head in northeast Missouri. Gavin saying there was a little bit of crunch in the air yesterday as he headed out to combine. You can see that he managed to record the date for history. I'll have more in your forecast coming up.
In the southeast, recovery continues for farmers and ranchers hit hard by recent hurricanes. Now USDA is rolling out some financial relief. The Ag Secretary announcing indemnity payments for producers impacted by Hurricane Helene. Vilsack saying about $233 million is available for hurricane-related losses. That money coming from the Hurricane Insurance Protection Wind Index and the Tropical Storm Option. Approved insurance providers now have 30 days to issue payments to producers. The agency breaking it down by state, including $5 million for Alabama, $12.8 million for Florida, $207 million for Georgia, $4 million for both North and South Carolina, and $61,000 for Virginia. These payments are in addition to payments made for Hurricanes Beryl, Debbie, and Francine, all of which hit the U.S. earlier this year. That brings total 2024 indemnity payments to $630 million.
Flip Your Soil on Ag Day is brought to you by ESN. Hear why farmers across the country trust ESN to protect their nitrogen investment and maximize yield. Learn more at smartnitrogen.com.
As farmers and ranchers look toward the future, there will be financial incentives for capturing carbon by flipping their soil through climate-smart practices. However, carbon company officials say crop and livestock producers will benefit from sequestering carbon beyond trading carbon credits. Now, they point to the noticeable changes producers will gain through implementing soil health practices on their operation.
You know, the carbon credits, the big companies, that's what they pay for. But also restoring your carbon and storing those grasses, it's what's going to restore your water cycle. It's going to build in more biodiversity. So there's so many other benefits. Carbon obviously is one of them, but often you'll hear us use phrases like nature capital or natural capital because it encompasses this broader thing, and all of those are related closely to that climate smart grazing programs.
Now, he says for producers to know if they're making progress on soil health, they need to first measure the carbon in their soil.
The number one step to do that is we have to baseline it. We have to understand where everyone is.
That will give them a starting point to compare how different practices help store carbon over time. Corn futures fight to stay in the $4 range while November beans drop below 10. We'll talk prices and markets coming up next. And later we continue to follow the fall drive and an operation that is bullish on the cattle business.
Register now for the Milk Business Conference December 10th and 11th in Vegas for a chance to win tickets to the National Finals Rodeo while in town.
That big corn buy we told you about helped push grains higher midweek. AgDay's Michelle Rook has more on that in the Good Day in Hogs as well in Markets Now.
Grains ending mixed on Wednesday. Garrett Toy is back with analysis. And Garrett, let's start off with the good news first. Corn market to the plus side. How much was technical? How much was that big export total that we saw?
Well, we get down and bounced off of $4, and the big flash sale didn't hurt the traditional business to Mexico this year and next. But I think it's routine business. But we know based off the SEP1 stocks report that we had very good demand at these levels. I think it was just an opportunity to to extend those sales. It is noticeable, though, that according to our records, that the flash sales that we've had, including today's, would make October one of the largest years of flash sales this year on record.
Yeah, and at these levels, this is really a value buy, isn't it?
It feels like it. The Simple and Stocks report showed record fourth quarter demand. Yes, the farmer unloaded a lot of the corn. There's storage trying to make room for the new crop, but demand offset it.
And soybeans going the opposite direction there. The funds back selling in soybeans. Are we taking out South American weather premium or what?
It definitely turned 10.50. I mean, we were right in the middle of the line as far as whether they're going to make a move towards $11. The forecast turned, and now the forecast look like there's going to be chances of rain across the north and central growing regions, at least every day for the end of the month. So, forecasts are wet. Their producers down there similar to the U.S., even though they're about 8-9% behind average. It won't take them long to get caught up on planting percentages. But a combination of that, along with concerns about the Chinese economy and the burdensome U.S. stocks, it definitely has some pressure.
And soybeans, technically, are we going to go back and retest the lows? I mean, what do we look like here?
Well, first things first, we traded up to $10, which is the old support and now resistance. That failed, and we closed at the lower end of the range. And if we don't find a turn here fairly quickly, the 955 lows possibly could be retested at this pace. Around the 965, we have a trend line off of July areas. But no, I think that we have some support, needs to find some support here fairly soon.
Appreciate it as always, Garrett Troy, Ag Trader Talk. I will have more AgDay coming up.
Watch Markets Now with Michelle Rourke on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
Quite the contrast to end the month of October here in the country. As we can see, pretty much everybody really warming up all the way out to the Four Corners states. Again, out to the East Coast, going to be seeing those above average temperatures, especially for late October. This is usually something that we do not see almost 75% of the country going to be actually warmer than they should be. And the one outlier, I should be saying, is going to be the Pacific Northwest up there in Seattle, where they'll actually be a little cooler than they should be for this time of year. And it's all going to be because of the jet stream, specifically the big ridge of high pressure that'll be building up in the central part of our country, and it's going to actually take a lot of energy to finally push that over. So as I put this in motion today, we can see those heights really shooting up just north of the Great Lakes states there up into Canada, but we also see this smaller trough moving off the east or the west coast. But again, as we can see, that pretty much falls apart and becomes that cut off low that's going to be situated over the Four Corner states, actually bringing some cooler temperatures there for the weekend. But we're still dealing, again, with that massive ridge of high pressure. That's going to take a lot to break down. Again, as we can see, this low tries to ride over it, not really doing that a lot, bringing some relief again to the upper Great Lakes states. But again, still a lot of people still going to be dealing with those warmer conditions for the next week or so. Here's our next 24-hour precip forecast. As we can see, we do have some light precip that will be affecting the western part of the country and slowly but surely moving over east, but not a lot. We can see a lot of rainfall actually over there just north of Texas. Bluefield, West Virginia, high of 52 degrees, low of 34 degrees. Fairfax, Minnesota, windy, 72 degrees, 51 degrees. And Hubbard, Oregon, 60 degrees, low of just 41 degrees.
Beef margins gained some ground according to the latest Sterling Beef Profit Tracker. Feedlot profit margins, they increased $113 per head to an estimated industry average of just under $203 per head. Meanwhile, beef packers saw a small margin gain of $26 per head from the prior week, but are still seeing a total loss of $86 per head. Now, cattle markets last week carried a total feed cost of just over $450 per head. That's about $12.50 less than feed costs for cattle sold the same week a year ago. An Iowa farmer was sentenced to more than 15 years in federal prison after pleading guilty to livestock theft and committing fraud during the pandemic. We first told you about the case involving 54-year-old Michael Biedekofer of Iowa last December. That's when he pleaded guilty to theft of livestock, wire fraud, and false bankruptcy declaration. The U.S. Attorney's Office says Biedekofer operated an unlicensed custom cattle operation known as Fawn Hollow. They allege he also didn't own the titles to the cattle he sold and kept the money for himself instead of giving it to his investors, adding that he defrauded USDA of more than $1 million in emergency assistance set aside for livestock producers during the pandemic. And officials say he also received over $1.5 million from the Small Business Administration during the pandemic. But instead, he used the funds to file for bankruptcy. They say he also recruited H-2A workers under false pretenses and used threats of force against the workers. He was ordered to pay more than $5.7 million in restitution. Well, fall is a busy time of year for America's ranchers. And as fall cattle work kicks off ahead of winter, we'll visit an operation in Iowa chasing the fall drive, next in the country.
Drover's Report on Ag Day is brought to you by Neogen. Prioritizing herd health and embracing genomic testing are key steps toward maximizing your operation success. Stay ahead of the curve, invest in your herd's health, and uncover their full potential. Fall Drive on Ag Day is brought to you by Scour Boss from Elanco.
Continuing our look at the fall drive, with farm income projected to be lower for 24 and 2025 due to lower commodity prices, one bright spot is the cattle market. And as Ag Day's Michelle Rook discovered in Iowa, it's providing an opportunity for growth that grain farming can match.
Here at Kennedy Cattle Company, they're expanding these feed yards from the current just under 1,000 head to over 3,700. And it's indicative of the optimism they have for the cattle business. This has been a familiar sound at Kennedy Cattle Company the last few months as construction crews work to add pens to grow the 990 head feedlot started in 2012.
As you can see in the background, we're in the process of putting an expansion on. We're going to triple that size here and hopefully be done here in the next couple months.
Kennedy says with cattle numbers at historical lows and cattle prices at historical highs, that means high risk for expansion, but possible high reward.
Just decided it was time to bring some more outside cattle home and try to feed more of our homegrown feeds and be in more control of what's going on.
For Zach and his family, including his brother Mitch, this expansion provides a better opportunity than trying to buy land in Iowa, and their growth plan reflects his outlook on the cattle business.
I'm bullish the cattle business, especially in the upper Midwest. We raise a lot of feed up here. We've got some packing capacity, and I also think there's some certain folks that for whatever reason probably won't be feeding cattle here going ahead, so I think we can fill that void.
Kennedy says to grow, they had to overcome the regulatory challenges of becoming a CAFO.
We worked with a really good engineering company that knows the regs inside and out, as well as with our manure management company.
Kennedy's also have 150 head of commercial Angus-based cows they use to stock the feed yards, plus they custom feed.
We're open to everything. We do a lot of retained ownership with some cow-calf outfits, feed their home-raised calves for them, feed a lot of yearlings. You know, I always say we'll feed about anything.
Zach says they paid financial and mental tuition as the bull cycle in 2014-15 ended abruptly. So this time they're risk-proofing their operation.
I would say from a company standpoint, we're doing a lot better job on our hedging, marketing, you know, the financial aspects of what we do.
A big difference from then is operating and borrowing costs have skyrocketed. So they're offsetting that with feed they grow on 1,500 rented acres and watching the bottom line.
But it's like anything, you got to manage it. Know your costs. That's obviously the big one.
They're also protecting their investment through beef quality assurance protocols and comprehensive disease prevention.
I think it's so important for what these cattle cost, and those products don't cost much. So we're going to spend the money to try to be on the front side of it and not have a wreck on the back side.
He says the goal is with nearly 2/3 of their cattle marketed either on the grid or dress basis, that will pay back in quality premiums and strong closeouts.
I think we're going to be sitting in a pretty good place here for a while. Calves cost a lot, I get that, but there's still margin, so we're going to try to run with that.
And hopefully help them build for the next generation. I'm Michelle Rook reporting for Ag Day.
All right, thanks, Michelle. And that's all the time we have this morning. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day out in farm country.
Fall Drive on AgDay is brought to you by Scour Boss from Elanco.